Right then, so gold. The inflation data today was very much in line with market expectations and essentially what has already been priced into the market. So it was a lovely excuse to run that right up into stops, pulling up breakout traders, only to backfire on those positions. And we've seen a subsequent move lower into the low of the day, taking out London sessions lows and structure. So, on that basis, the thesis is lower. On the downside, we have, get in there, uh, okay, we have this structure here broken. So, this is now going to be regarded as a resistance area level. And if you look at the weekly template, Monday, we've got the lows over here. All of that money from the start of the week is essentially in the money. And the market doesn't like to let you stay in the money for too long. So we're seeing a move into in the money positions, and there is more in the money, low hanging fruit below Tuesday's lows. Okay, so now also bear in mind um, that this market has been running long last week, and we took all of that out and we've moved back up into that area, which is fuel for a downside continuation. So we've broken that bull trend on this move, and we've created this new trend, which we've now broken as well with that move. So we're on the backside of this trend. So while being on the backside of that trend, the bias is bearish. Now, what we could see is an opportunity to short so long as we get confirmation the market isn't coming up above these levels. Put the low in. Okay, so this for me is the resistance area, and I want to see any correction decelerating either below or within. For a subsequent short. Targeting all of this money to the downside. Now, that's not necessary to say that's a day trade or it's going to play out before the end of this week. But it could well do. We've still got Thursday and Friday to come. The daily ATR, average true range, is around about $30. On the day so far, we have seen a range of less than that, $25. So there could still be some more downside to come. Very reasonable target is 2019, just below maybe where it stops. Now, if we pull this out to the daily, we've also seen that break of So we've seen, right, there's two ways to look at it. Either we're impulsing higher, correcting to move continuation up. That's not my bias. Or we're breaking lower, correcting to come back lower. My bias is lower considering that daily engulfment and close to the downside last week. And I think there's more downside to come. And that's not to say that the upside isn't still intact. I mean, it is well above all of that. But I think we could be coming in for a test of this trend line, these lows, these supports, and if we break that trend line, that would be highly bearish. But for the meanwhile, we're looking into here, this area, for the foreseeable day, for the foreseeable sessions, whilst we're below this cluster of resistance. Okay, so I hope that helps.